Infosys on 26th of December revealed about the termination of a $1.5 billion deal with a global client. Focused on artificial intelligence solutions, this deal with the unnamed global company was announced in September last year. Tata Consultancy Services, or TCS, also lost a significant IT outsourcing client as Transamerica Life Insurance terminated the remaining portion of a 10-year, $2 billion contract initiated in January 2018. Transamerica cited challenges in the macro environment as the reason for cancelling the contract. The agreement signed in early 2018 had TCS collaborating with US-based Transamerica to digitize over 10 million policies into a unified integrated platform. These two deal cancellations may not be enough to establish a trend, but they could perhaps become a cause for concern. Industry experts suggest that clients of leading IT services firms are pushing for pre-inflationary rates and pricing concessions in both new agreements and contract renewals. This demand for more favorable terms could be a contributing factor to the cancellation of deals.
This is more to do with, this is more of a global phenomena around how technology is evolving. If you look at deals traditionally, those would be 10-year deals. And it was fine to have a 10-year deal because change in technology or how technology would evolve would not be so fast. But now, as we see technology evolving at the pace and the rate at which it is, we are seeing new and new things like AI, blockchain, all of it coming in. It probably becomes difficult to hold it into a contract which is of a duration of 10 years. So we are seeing this as a trend globally, not with any specific company as such, that contracts are becoming shorter or clients are more and more prone to cut short contracts so that they can bring in more versatility in technology and the contracts can look at the evolving nature of technology.
The reason for the cancellation of the deals was not disclosed by the companies. The cancellations also highlight change in technology and the uncertain economic condition in the global economy, which has impacted the IT sector's performance. Amid concerns over inflation and a looming recession, the $245 billion Indian IT sector is grappling with challenging conditions as clients are cutting spending on non-essential projects. Industry leaders, including Tata Consultancy Services, Infosys, and HCL Tech, have been compelled to accept contract conditions such as guaranteeing minimum cost savings, billing the client only if certain goals are achieved, and reviewing cost overruns. According to IT research firm Everest Group, over 80% of the 1,600 IT and business process management deals tracked in 2023 featured committed savings clauses compared to approximately 65% in 2019. Deals signed this year with such clauses reportedly include HCL Tech's $2.1 billion agreement with Verizon and $454 million deal between Infosys and Danske Bank.
At this point in time, the IT sector is facing a lot of uncertainties, and these uncertainties has never been new to the IT sector. It has always been, technology has always been challenging from that perspective that it has gone through constant change. Now, you have seen that the latest is the generative AI, which is introducing some sort of disruptions at this point in time. It can be an opportunity, it can be a threat for some, depending on how you take it. There are other uncertainties also related to the growth and many other factors which are actually impacting the decision-making process of the clients. But as I see, 2024 appears to be good for IT sector, and we expect that double-digit growth in the IT services spending is going to continue in 2024.
Major Indian IT services firms are placing strategic bets on substantial and mega deals to enhance their client focus, resulting in increased revenue, accelerated growth, and long-term cost savings. These companies typically define deals with a value of $100 million or more as large, while those reaching or exceeding $500 million are classified as mega deals. TCS won $11.2 billion in deals in Q2 FY24, which is a 38.3% increase compared to the last year. This includes the 2 large deals from BSNL and Jaguar Land Rover. Infosys saw an increase in total contract values by 180% in the September quarter by winning deals worth $7.7 billion. HCL Tech also reported record high deal wins worth $3.97 billion, which is a 65% year-on-year increase. In FY24, reports indicate that the combined total contract value for the top 5 Indian companies, which are TCS, Infosys, HCL Tech, Wipro and Tech Mahindra, is expected to range between $70 billion and $85 billion. Renewals are anticipated to constitute around 30 to 35% of the overall deals secured. So what could be the future course of action for these companies?
They need to actually constantly renovate and innovate, and that is the way forward for the organization. They need to closely watch the trends which are there, leverage the kind of situation which is unfolding in front of them, and they have to be agile and flexible in order to navigate through this crisis which we often see in the market. There are a lot of opportunities also coming up, and from that perspective, I see that the demand for sustainability is growing, and the companies need to be more aggressive in terms of driving sustainability.
It is too early to establish a trend based on the recent cancellations. Meanwhile, there is optimism among experts regarding the dual advantages that AI could bring to the IT sector: increased deals and reduced costs through the potential replacement of engineers. To conclude, the specific deal cancellations of Infosys and TCS are more likely to be isolated setbacks, but tougher deal negotiations are likely to continue in 2024.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
She's working her way to the corner office. Business Standard.